Hello, everyone. One of the biggest problems that I've ever had with swing trading specifically is how long to let runners ride. How long should I allow winners to just continue winning, and how long should I hold them for? One thing that I will say is that these past few swing trades that we took, we have not had that issue. We gapped up 2 times in a row. We're still, thankfully, still holding our swing calls. Generally, I would have taken profit. Generally, I would have sold a majority. I would have held a small portion. But thankfully, things are still working out. So in today's video, we're going to take a look at the specific trades that we're still holding, why I was so bullish, what the next steps are for the market, how much more room to the upside is there. And I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. Let's get started. All right, so first and foremost, last Wednesday on the 15th is when I updated my swing calls. Amazon was still a part of this list. I just didn't add it. But what I mentioned was on a 5K account, on an account that is worth $5,000. If I had all of these trades, I would sell everything. And the reason for that is because when something is up 70, 40, 30, 30%, your goal on a smaller account is to try to build it 5, 7, 10, 15, 20, 25. All right. On a 5K account, I would sell all. Thankfully, we don't have a 5K account. And the reason why I mentioned the 5K account is because I'm soon going to start a $5,000 account challenge where I'm going to build an account from $5,000 to hopefully much larger using only swing trades. So I mentioned I would sell all. Now, when you have a smaller account, you have to trade way more defined, way more precisely, way more stringently. Thankfully, when you have more money, you're able to play with more wiggle room, right? And that's what we're doing. I have not updated the swing trade channel since the 15th. I tried my best every single time we gapped up, every single time the market shot up, skyrocketed. I tried to stay away from this channel because I didn't want to mess up a huge, huge opportunity to the upside. So far, it is doing exactly that. So we're holding NVIDIA calls, 134 calls for NVIDIA. NVIDIA just hit 142 today. We're in Amazon calls. Amazon just hit 231, 232. Okay, so these are both in the money. We sold out of the Tesla calls. We are in NASDAQ calls. We are in NASDAQ 509 calls. The NASDAQ is at 526. And then we entered into 584 SPY calls. SPY 584. These are at, where did the SPY go today? 603. So this is a really, really, I'm just proud of myself, and proud of everyone that's still holding, proud of everyone that made money, I'm proud of myself, and I'm happy that I'm able to help, and I'm just at a loss for words. We caught this into inauguration, into all of the negative news. Let me show you guys, man. So this is a daily chart of the ES, the S&P 500 futures. We were bullish while every single person was expecting us to make new lows and drift lower and lower and lower into a new year, into presidential inauguration. Really? Trump was about to become president. It's just a good time to start being bearish. By all means, God bless. We were bullish. I became bullish on January 13th, which is what marked the bottom on Apple. We caught the bottom on Apple. Apple's strength and then NVIDIA's strength helped fuel this rally in the overall market, which is what pushed the S&P 500 above 600, which is what pushed the NASDAQ, above 520, back above the uptrend line. The NASDAQ is back above this uptrend line. And it was because of strength in those stocks that caused the market overall to bounce and presidential inauguration. So now, thankfully, beautiful stuff. Beautiful stuff. What I'm most likely, I'm not going to mention that, but what I really want to see is just overall, just the trajectory of how strong I feel the market is based off of this is we can easily see 615, 620 soon. Not necessarily in a straight line, right? But just this amount of buying pressure is not something that you can really take lightly. Not only did we have a gap up, right? So this is obviously this is this doesn't really happen often, right? We got a gap up. So from the lows, right? When every Tom, Dick, and Harry became very bearish, we gapped up almost $6. Okay? Great. Everyone expected a pullback. Did we get a pullback? No. We held 592. Remember, we held that 592 level. And then we continued rising afterward. We gapped up again. Another $5. Held, and then we gapped up again. How many times are we going to gap up? I don't care because we're still holding longs. I don't mind. But this does not generally happen. And it's a blessing that many people became very bearish into this extreme strength when we were leaning long. And it really worked out. What these next few days holds is purely dependent on sentiment around the inauguration and just continued bullish pressure. And, like it just became really easy to find a bottom here. We are not at a top. So this is not topping out. There's no signs of a top. There's no reason to become extremely bearish. There's no way that I would start being bearish. This isn't even an opportunity where I would go long in longer term puts. I would not even enter into 6-month out puts up here. I mean, it would probably be profitable, right? 6-month out puts right here, most likely going to be a green trade because eventually in Q1, Q2, there, I wouldn't be surprised if the market does drift up to like 630 and then fall from 630 and then, drift down low. Something like that could happen. I would not even enter long-term puts right now because I don't feel like there's an extreme amount of pressure to the downside. The pressure is clearly to the upside, and you cannot ignore it. But now, the question is, how much more room is there to the upside? Where is the market going to go? I already gave you guys my thought process, maybe 615, 620-ish area soon. But what's the best way to figure it out? What's the only way to really find out where the market is going to go? You have to look at other things in the market. The large tech stocks are very important to look at because it shows those other things, those other variables in the market. When a large tech stock, trillions and trillions of dollars worth of market cap, moves in a certain direction, it influences the rest of the market. So let's go ahead and look at the large tech stocks as a whole and figure out, okay, if XYZ stock is doing this, let's see how it affects the rest of the market. All right, so let's get started. So this is a daily chart of Apple. All right, so clearly this is not a very great bullish chart. All right, two main things can happen here. Number one, Apple showing this weakness can be a precursor to the weakness that's going to permeate into the overall market. I don't believe that's going to be the case. Number two, which I do think is the case, that we also saw today, is even though Apple was gapping down like this, the market as a whole was still gapping up and it was still green. That is ridiculously bullish. Can you imagine if your best player was injured and the rest, if your best player was injured and the rest of your team still did amazing? That is basically the performance that the overall market did. That is very bullish, because then just the fact that like the team performed that way without their best performer That's very, very good for the team, right? That's basically how I'm looking at this. So Apple being very overextended now to the downside in terms of its Bollinger Band. You could see that we closed outside, we gapped down. This is clearly weak, right? But we came back down to this 220 level. Major support. Major support. You cannot deny this. But now the main problem is if Apple begins to really break below 220 and continues to break below 220, heads to 210, will that then cause the market to really start to deteriorate? I don't know yet. I don't know yet. But what we can say on face value right now is that Apple being this overextended this week right now and the market being this bullish is good for the market. Because once Apple starts to bounce, it gives all of the other winning stocks, like, say, for example, all these other stocks doing very, very well. All of the other stocks that are strong, right, while Apple is weak, all of the other stocks that are strong will have a chance to take a breather. Because, again, think about it like this. If your best performer is back in the game, your other teammates can take a break, right? Your other teammates can say, okay, all right, I don't need to run as hard. He's here, right? So if Apple starts to rally, those other stocks can start to take a break, start to consolidate, make some sort of bullish structure. And then after Apple makes a rally and it starts to consolidate a bit, boom, you have someone just got off the bench, right? So that's essentially what I'm looking at these as, okay? So Apple, Tesla started to become very, very bearish this morning. It capitulated basically as soon as the market opened. And then we had a rally back up. So Tesla, this is not, this is still, it's showing some bullishness. It's not exactly a completely bearish setup. But you'd have to be kind of crazy to to go long on Tesla at the close or on this daily setup. Like, if you're looking at this daily setup, if you're not in any position, you're like, oh, wow, okay, I want to go long here. You're an idiot. This is not the setup to go long. How does this look like the setup to go long? God bless. If you did, God bless. Congratulations. But it's not, I would not go long this. Nor would I really go short, but I would definitely not long it. It could probably work, but it's not a good risk reward. Like I said, what we end up doing is we find the bottoms or we find the tops, so we time those things a little bit better instead of randomly just chucking darts in the dark. But thankfully, it is what it is. Regardless, Tesla doesn't look extremely bearish. Does that make sense? It doesn't look like a completely bearish setup, okay? Google definitely does not look completely bearish. Google gapped up above the bullish above level that I marked out. And you could clearly see we gapped up. We had a big wick to the upside. This wick is a bit worrisome. But once again, this 197, 198 level is very, very important for us to continue holding on Google. The strength cannot really be ignored. And I would only really become bearish. I would not even. So the issue right now, especially on Google, and the running issue that we're going to have on the rest of the market, that I didn't really want to mention earlier on, but in my Discord, I wrote that I'm most likely going to sell out of all of my longs soon. The longs that expire on the 28th of January and the 31st of January. I'm most likely going to be selling out of all of those very soon. The reason for that is because now things are getting a little overextended. I wouldn't be bearish, though. But you have to take profit on the longs. In my opinion, I could be wrong, but this is one of those concepts. Like, I would not be bearish on Google here, but it's tough to be bullish. Like, I would rather wait for it to come back and then go long. But, hey, you could definitely go long here at the close. Going long here at the close on Google, probably a better setup than going long on Tesla at the close. That's that, okay? Microsoft, one of the worst performers of this entire recent move. We're still holding below the bearish below level, below 431, 432. Clearly not a performer. It's not doing too well. So Microsoft is definitely needs some time, needs some room here. I wouldn't be extremely bearish on it, but it does look like it has more room to go to the upside. Amazon we caught Amazon pretty well, and it was red the day that we were in it, but thankfully now it is back. It's not even back. It finally broke above the bullish above level. We caught it down here, and thankfully this is all we did. We just went long at support, and we just let it play out. Now we're above resistance. Now this 230 level becomes support, and we get to live very comfortably and allow the setup to do its thing. So now we need to see if Amazon continues up, if Google continues up, if Microsoft and Tesla can break above their levels of resistance, and if our star player, Apple, can one of our star players, Apple, can pull its weight, right? And we're so NVIDIA also very nice, not doing exceptionally well, but AMD, NVIDIA, these chips doing their thing. They're doing well. They're bullish. They're doing well. So as a whole, these large tech stocks look bullish, except for Apple. So what does that tell you? What does that tell you? For example, Amazon, right? Not even to mention Netflix. Netflix just reported earnings. Netflix is up $100. Okay? If all of these stocks are showing this strength, right? While Apple is falling from a tree, right? If someone picks that Apple up, while the market is already rallying, can you imagine how well the market is going to do? That's my point. That is the reason why it's very, very difficult right now to be extremely bearish, because there's so much upside potential for the market to start doing badly. You need all of the large tech stocks to start doing badly. You need all of the bullish structure that's been formed, all of the levels that have been broken above the upside on these large tech stocks to just fail. We need the market to fail. We need the market to drop below support. That's very, very unlikely. And that's very, very unlikely. And just looking at it from this, right? Just looking at it from this perspective. Zoom out. Take a deep breath. Let's take a sip. Nice and simple. Do you become bearish on Apple here? Is this the time to start being bearish on Apple? Absolutely not. Why is that? Because we are at a level of support. Apple is down 15% from the freaking highs in the past month and a half. This is the time to start being bearish? This is what you want your... This is why you wanted to leave your job and become a full-time trader? Go bearish down here? No. Could not do that. This is not the time to be bearish. More so, down here, this is the time to start looking for long opportunities. And we're starting to get one. 220, major support on Apple. I would not be surprised if we come down to 210, 215. Great. If Apple does drop to 210, 215, right? The rest of the market can get a bit of a scare. All of the large tech stocks can get a bit of a pullback. The SPY can come back down to 594, 595. By all means, everything could drop 2% for the day, right? Excuse me. That's not a problem. The problem is to continue to be bearish into this weakness, into these levels of support, has never worked. It's never worked in these past years and years of this YouTube channel. This is the 20-minute mark of this video. I'm speaking to people who watch these videos to the end. I'm telling you, for 4 to 5 years that we've been making these videos together, everything that I've been sharing, not once have we ever went short into extreme weakness like this, because it doesn't work. What we rather do is always look for bouncing opportunities. We always look for opportunities to go long, because you have to play the risk reward. If something is already down 15% from the highs, yeah, it could go down to 17%, 18% from the highs, but the reward for the upside potential is much higher than an extra 2 or 3% to the downside. And that's honestly, that's what I feel is going on with the overall market at the moment. It's going to be a very, very interesting next few days for sure. Next end of the month for sure. It's going to be very interesting. But with that being said, guys, I mean, this is it. This is what we're seeing in the market. The price action that we had today was a bit choppy. Couldn't really do much with it after the opening session. But not complaining. Not complaining. These trades have been working out. We're going to continue trying to find really, really good setups. And hopefully you guys enjoy. And hopefully, you know, we can catch the top. So what I'm really, really hoping for is once the market begins to top itself out, once the SPY and the NASDAQ begin to top themselves out, we're going to be able to catch that top and go short. Right now, in my opinion, unless we get some sort of I might miss it. Unless we get some sort of like a black swan event or something like that, it is what it is if we miss the top. But it doesn't, there's no inclination, there's no reason to really become extremely bearish right now. If that time does come, I'll make sure to share it with you guys. But until then, nothing. I really can't see anything. We got a close above the uptrend line. If we get a close above 524 tomorrow, we got 2 closes above the uptrend line and more room to the upside. So this is a really, really bullish situation. From what we're seeing, this is a very bullish situation. I would love to sell out of my longs and enter short soon. Let's see what ends up happening. All right, so I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.